Palantir is having the biggest bullish run of its history, with the market expecting ever more bullish news for the end of 2024 and the year to come. It is a very encouraging and rewarding moment for anyone who stuck around for Palantir, and there are many who did. Palantir has always been a popular pick for traders, and now it just jumped on the rocket ship going all the way to the moon. With that being said, many joining now simply don't want to miss out on something potentially life-changing, even though they don't necessarily understand what the company is really about. Whether you like or hate it, Palantir has always been an interesting stock for the right reasons. Hey everyone, I hope that you're having a good time with many profitable trades. In this video, we're going to talk about Palantir and see if it can make you a lot of money. As the share price has maintained itself above $60, it is yet another significant milestone reached for a stock trading below $10 a bit more than a year ago. Break-even and profitability helped its fortune first, and then the AI craze along with macroeconomic catalysts took care of the rest. Palantir is now officially part of the major league, has entered into the price discovery phase where the sky isn't the limit. The market wanted a recovery or a comeback, and what we're seeing right now is an absolute triumph for those willing to give the company a chance to grow. With the financial landscape moving thick and fast, it wouldn't be surprising if new highs were made in the days and weeks to come. Volatility is a very sharp double-edged sword, and that sometimes works in our favor. As one of the most symbolic companies in a brave new world, Palantir has been keeping the market's hope up to offer a safe haven for anyone looking to commit their assets in equities. AI isn't mankind's salvation from itself just yet, but Palantir shareholders certainly hope that their wallets can be blessed by the hype. Over the years, way more than one of those tech stocks begging for our money in exchange of empty promises, Palantir is now a major player in the sector that may tell us a lot about how the market appetite for risk exposure looks like, and if there is a rising tide ready to raise all ships coming our way. The company has enough reputation and prestige to trigger the market's curiosity and people's tendency to follow popular trends. It is a company that people would often view as the risk appetite of the market. Palantir's reactivity to the macroeconomic tidal waves makes it a very interesting company to analyze and to perhaps invest in. In this video, we're taking a deep dive into Palantir and see whether it deserves to have a place in your portfolio. Before the video continues, I just want to take a moment to thank each one of you for coming to my channel and hope that you will enjoy your stay and then come back for some more. If you like what you see, please consider to like, subscribe, and check out my channel for more content about Palantir and other companies I cover. With that being said, I hope you're gonna like today's video, and let's continue. Let's begin with the price action. So Palantir had a good run recently, and even though it's slowed down at one point, right now it's picking back up, because the market believes that the share still has a lot more room on the way up, now that the 2021 peak of $35.21 is very far behind us. Less than half, in fact, of the current price action. Since there's no actual resistance ahead, Palantir shares are currently discovering where its share price can actually land, and the fact that this process is still ongoing, in my opinion, gives a lot more steam to this boat. The recent news have been very bullish for the company as well, whether it's the elections results, the end of some conflicts around the world, or the projected end of conflicts around the world, or the company's own fundamentals. The shares opened at $80.65, reaching a high of $82.02 and a low of $77.41 before closing at $80.69. There's an increase of 6.5% in share price over the past 5 days, with a weighted alpha of 293. In terms of volume, the past few days also saw a lot of activities that came with the volatilities, with 90 million shares exchanging hands in one day, with the 30-day average reaching 94 million shares. The previous pullback that saw Palantir shares going from slightly bullish to slightly bearish over the past few weeks seems to be history at this point, with the market aligning itself to start 2025 with a bullish note. There have been a few announcements from the Fed regarding the interest rate cuts, of course, for which many believe is a slowdown compared to the previous rate cuts. And also, we got to remember that, pullbacks are normal in this day and age and in this kind of condition and should be expected as some traders decide to take profit. The market consensus continues recommending a buy, with the moving averages recommending a strong buy. The current trend continues to be bullish as the recent price action trades above all simple and exponential moving averages. With that being said, the RSI, though, seems to recommend some sort of either hold or sell, and that's probably because of the magnitude of the recent increases. Unlike many tech startups, Palantir is highly sensitive to what happens in the real world. Economic figures, changes in key policies, and election outcomes are all major catalysts for the price action. The recent presidential elections turned out to be excellent news for Palantir's price action because, or at least partially because, Peter Thiel, co-founder of Palantir, has always been a key supporter of the president-elect. The company has been maintaining and developing its relationships with the public sector for a long time, especially in defense, healthcare, customs, all of which are key aspects of the Republican agenda. Despite the fact that the company has contacts on both sides of the aisle, it's obvious that from an ideological standpoint, the company is much more in sync with the upcoming administration. In terms of the media coverage, the articles tend to follow where the price action of the company currently is, with a few voices suggesting caution given the gains already accumulated so far, despite a valuation model based on the projected potential of Palantir. Many suggested that Palantir may be on the cusp of more prosperity of growth on the way up, given the election results, the interest rates decrease, and the potential changes on the geopolitical scene. Usually, the news articles may not be necessarily worth analyzing one by one, and yet the overall tone set by the media landscape may be a forerunning sign of a trend continuation or reversal. The stock's price action has been able to hold itself above $60 level so far, while looking for new horizons in the current phase. The valuation of Palantir has been fueled by the company's own performance, the surrounding environment, and the eagerness of investors to find a refuge in an uncertain environment. A lot of people have been looking to find a decent entry point to make a comeback to the equities market, and when the Japanese market liquidated billions of positions, their wish was granted by the fear of paper hands at around $25, and that to date has been the last opportunity to buy Palantir below $30 for anyone interested in its fundamentals. The next target is probably going to be $50 given the current market. Now, the composition of shareholder base is more retail for Palantir rather than institutional, which makes it a stock made of momentum, a lot of anticipation, and a lot of self-fulfilling prophecy as well, instead of level-headed analysis on the actual numbers. We're not here to buy the Palantir that already is, but to own the Palantir that people hope will eventually become in the next few decades. Any rational analysis of its financial results may justify the short-term price actions and maintain the price action to a high baseline, but certainly not to push its current valuation to new peaks, or at least not to the extent people want to trade Palantir for in the first place. We can see that the market reacts far more significantly to the announcements of keeping or gaining new public contracts than any other numbers. To a fault, Palantir remains heavily dependent on the public sector, and it certainly shows in the price action. Looking back, the region with a lot of support levels has been identified around $45, above which we have entered into the price discovery phase, providing a huge amount of stability to the price movements. These levels serve as important markers, indicating potential areas of price reversal or continuation that have now been passed through, and the fact that they have been tested and successfully defended means that the price action really shows the company's own potential and resilience. The current consensus around Palantir is that the market wants to keep going, but they're also looking for more clarity from the rest of the potential shareholders before making the move, because a lot of people also believe that the world economy is in a very special position after years of shutdown and that a massive correction is way overdue. From a longer-term perspective, Palantir has a pretty interesting price action pattern compared to the all-time highs a few years ago, because it has already succeeded in going beyond its previous all-time high, and there's a lot of potential regarding where it might land next. Palantir is a tech company created back in 2003 and went public in late 2020 at the peak of the last market boom. It operates in the data analytics subsector of the tech space and has been one of the leading companies in that area. It is known for its position-taking, the relationships with public sector actors, and its engagement of key members such as Peter Thiel and Alex Karp. Another aspect that sets itself apart from many of its rivals is its proximity with the intelligence community, as the company relied on seed funding from the agencies back in the earlier days. No one ever shouts from the rooftop that they want to do evil, but Palantir certainly doesn't shy away from more delicate situations by working with public sector agencies in legal, healthcare, border control, defense, and law enforcement. Simply put, it is a company that doesn't mind being portrayed as evil and almost wears it as a medal of honor. In fact, shortly after it went public, Palantir decided to move its headquarters from the Silicon Valley to Denver, Colorado. This move was more than a pursuit of lower overhead or a change of scenery, but a statement about the public image it wants to portray. The market has always shown a lot of interest in how the company and the stock are doing. The fact that it went public when the bullish sentiment was sky high in the tech sector could have been a contributing factor, as the world was preparing for a fundamental change about how societies would function in a place where more interconnectivity happens while remaining remote from anybody in the physical world, a technological and societal utopia that was deeply flawed and never truly came to be. Palantir shares attracted the market's attention mostly because its narrative was the right fit in the right time, as the tail end of the quantitative easing era mentality combined with the pandemic era dream of interconnectivity and never-ending financial boom, while capital was looking for a safe haven from the uncertainty and the collapse of the real-world economy outside of our screens. In a way, Palantir symbolized the answer we wanted to slap on all our problems, and for some time it was made true by the supply and demand of modern finance. We are interested in Palantir's promise of reaching ever higher price levels, a promise that seemed set in stone when large quantities of money were pouring in a company with deep pockets backing it up, as the world was preparing to enter in a new era of endless growth and prosperity. This bullish and very optimistic narrative about Palantir has been backed up by the numbers. Financial information has been known to move the market as stakeholders want to have their assumptions validated by something concrete. Gross margins, cash flows, and revenue growth are some of the most sought-after data points that people want to know about Palantir when they do their analysis. The growth margin measures how profitable Palantir truly is at the core. Beyond the quality of its marketing campaigns, the hype around its projects, or its brand power, Gross margin tells us whether there is enough demand for what the company is selling, and if each additional dollar covers the additional expense that the same dollar generates alongside. To that end, Palantir is a very successful company with a decent profit margin, even when the shares were trading below $10 during the last sell-off period. This was the first sign that Palantir is more than just an empty promise begging for your money. The business model is something that can be scaled up and marked up because it has true fundamental value and it is validated by the market and its clients. Once the core business model has been validated, cash flows tell us whether Palantir will need to go through cash injections to keep its operations going. And very often, a tech startup may ask shareholders to pitch in even after they bought the shares, because the funds collected from equity sale is not enough to cover the operating expenses. If that were the case, it would be a sign of weakness from the company because it would mean that the company's own operations are not profitable enough to stand on its own 2 feet. For Palantir, that problem is also non-existent because its cash flows have been positive for quite some month, mostly because its operations are profitable and it doesn't need to dilute its shareholders to keep the lights on. However, these numbers are not enough to push Palantir higher. The most important factor is the growth rate of revenue, especially from public sector. Like many other tech companies listed on a Nasdaq, people buying Palantir want to buy the powerhouse to become, not the decently profitable company that is. This would also explain the high multiplier that Palantir is currently enjoying compared to many other blue chips companies in more mature sectors. This is a double-edged sword for those who want to dabble in the tech field in general, but for Palantir, the public sector aspect is an additional side to watch for. Since most of its growth does come from the public, any additional partnership with healthcare, defense, or law enforcement departments may trigger massive upsides for its shares. On the flip side of the coin, every time an existing partnership ends or a scandal makes it to the headlines, Palantir shares may see a dip that could take a few days to come back from. These 3 measures are what define Palantir and may explain its dynamics in the market in general. It is an interesting company that people are putting a lot of hope into because its financial results are good and do suggest that Palantir has the potential that people claim it does. Because Palantir is a highly specialized and unique company that is praised for its technical expertise and noticed for its position taking by its management and shareholders, it's always been the center of a lot of interest, talks, and speculations from the market stakeholders, as well as the media outlets. Along with Nvidia and Tesla, it's probably one of the most talked about companies in the world, despite the fact that it has a much lower market cap than many other blue chips companies. Hardly any day goes by without an article to be written by major media outlets about how Palantir is doing, or where they believe it's going to land. The coverage can be relevant in 2 ways for our analysis. The articles can give us a feeling or a sense of what is the current market consensus about what happened, and the mood that is the most likely to influence what's going to happen next. Their tone is often determined by the price action at that time and plays the role of current trends amplifiers rather than contrarians showcasing potential trend reversals. Even if it's not a crystal ball allowing you to see where the price is going to go next, it can always tell you what the current sentiment is, which may allow you to take a hint of what the next move may be. The second level of analysis is more basic, but also more useful. It is not about the content but the quantity of the coverage. Depending on the number of articles written about Palantir as well as who writes about it, we can have a rough estimate of how popular the company, the narrative, and the sector are in people's mind. Alongside the potential upsides, entire economies may benefit from this as part of trickle-down liquidity from risk-seeking capital. Ultimately, papers want to sell clicks, just like investors want to get alpha. If there are shining bubbles in the market, news outlets are usually very fast to pick them up, validating the overall direction of any subsequent bull runs. The number of articles currently indicates that the market is interested in what happens with Palantir, and the anticipation is a further increase in price when the interest rates begin to decrease and fall. We just have to be careful about the limit of analyzing news articles, as they tend to describe the direction the wind is currently blowing, but far less effective when it comes to predicting where things are going to go next. Now, obviously, since you're looking up about Palantir, chances are there are unique aspects piquing your interest. Trading or investing in Palantir does come with its own upsides, including its unique profile, its potential growth rates, and the existing stability. Palantir is a company operating in the data analytics subsector, which is a very promising place, lots of favorable talking points and potential vectors for future growth going forward. The world is getting more digital and analytical on a daily basis, as more and more business decisions will need data-driven information in order to make that call, as well as to optimize daily operations and locate the trends of the future. Palantir has been trading for a few years, but its existence dates back more than a decade ago, and its expertise does bring it head and shoulders above many of its rivals. It has deep relationships with deep-pocketed public sector departments in defense, law enforcement, and healthcare that we talked about, all of which require Palantir's digital solutions for their planning and decision-making. Unlike many of the Silicon Valley unicorns, Palantir also doesn't pretend that it doesn't do any evil or that it lives in a perfect world. The HQ move to Denver, along with the Davos speeches of its CEO Alex Karp, do suggest that Palantir is willing to take on the challenges of the future and that it's not afraid to say so out loud. The relationships established by Alex Karp and Peter Thiel, two of the founding members of Palantir, have opened many doors in both public and private sectors, allowing Palantir to cruise on the trends. Recently, it also announced that it's going to participate in the trending AI field, which is one of the main reasons for the stock to go from $15 to $30. In addition to all this, Palantir does have a layer of stability that many of its rivals don't have, and that can be seen in its cash flows. Palantir's cash flows have been in the positive for some time already, which is a rare advantage above many of its competitors because it means that a company can sustain itself in terms of the needs and doesn't have to beg investors for more cash injections in exchange of dilutions. With that being said, investing in Palantir also comes with a few unique downsides due to its company profile and the characters of the sector itself. Being a company that analyzes data for a living, Palantir will be more exposed to potential legal problems compared to other industries. Since the topic of data privacy, ownership, and proper usage have been under heavy scrutiny from the past scandals with social media, how Palantir acquires, processes, and safekeeps those data while serving its clients can be open to legal battles, which may cost the company its image, reputation, its bottom line, as well as future opportunities to get more contracts from government agencies, the same agencies that may require these data that were maybe used under inappropriate circumstances. It's a bit ironic, but that's probably the way it's gonna go. My theory is that since this is a touchy, delicate area of this economy, and no one wants to rock the boat, meaning no one wants to take on the blame if anything bad actually happens, in that case it's possible that Palantir may take on the loss without having the capacity to shift any of the blame to other stakeholders, because if they do that, they're going to rat on other people, and maybe they don't have the opportunity or the luxury of doing this. The other thing to consider is the potential decay of the narrative's value. AI and data analytics are very popular topics now. They're trending in the market, that's for sure. But what would happen if they stop being so popular once a newer sector has been created out of thin air or come back from disgrace? If we look at what happened with electric vehicles, we may see a similar drop in interest for data and AI, along with a potential drop in their market cap value for companies like Palantir. So, what these additional risk factors mean for anyone really looking into buying Palantir is that it is a blue chip sized tech stock with the volatility, or arguably with the volatility of a startup, mostly held by retails. Trading comes at a significant potential price volatility cost, and investing does require a fairly high tolerance of uncertainty. So, right now, the global markets are facing a complex interplay of factors that have the potential to significantly influence the equities worldwide. In this speculative analysis, I believe that the consequences of the global inflation, surging commodity prices, and decline quantitative easing, as well as the rise of inflation rates or interest rates, plus the geopolitical instabilities, are going to play a significant part. The increasing inflation rate has been putting pressures across the globe, threatening the purchasing power, raising the input costs, and impacting corporate profitability. Companies operating internationally may face challenges in managing rising production costs and also to sustain profit margins. Those dynamics could trigger market volatility as investors adjust their risk return expectations. The upward trajectory of commodity prices, including energy, metals, agricultural products, have been having far reaching implications for various sectors of the global equities market. The companies heavily dependent on these commodities may experience squeezed profit margins, potentially affecting stock valuations and investor sentiment. The reduction or the end of QE's quantitative easing measures by the central banks worldwide may have resulted in reduced market liquidity. So, this in turn could lead to higher borrowing costs for companies seeking capital, which may also discourage investment activities or will. The elevated market volatility plus the reduced investors' appetite may also continue to occur. Now, the central banks around the world are tackling this delicate situation of balancing the inflation rates with the economic stability and, if possible, growth. Central banks opted for aggressive interest rate hikes to combat inflations. Borrowing costs for companies have been rising, which has also slowed down business activities and also fueling the market's volatility in terms of the equity prices. Now, ongoing geopolitical tensions, including trade disputes, political uncertainties, and social unrests, will inject an additional element of volatility into the global markets. Investors may adopt a cautious approach, shifting towards safer assets, impacting the equities. Additionally, the escalating conflicts may disrupt supply chains, negatively impacting the performance of international companies. Given the interconnectedness of global markets, the aforementioned factors have reverberating effects on the US equities market. Companies with significant exposure to international market may face a lot of headwinds resulting from the economic slowdowns, disrupting the supply chains and the currency fluctuations. But nevertheless, the US market is known for its resilience, and the diverse sectors may attract investors seeking safe havens. So, really, the current landscape is characterized by global inflation, surging commodity prices, reduced quantitative easing, rising central bank inflation rates, geopolitical instabilities, and also ongoing lack of certainty regarding growth. While the US market may exhibit relative strength due to the safe haven status, it's going to remain interconnected with the global economic landscape. For long-term investors, these conditions may offer opportunities to identify undervalued companies with strong fundamentals and international diversification. With that being said, short-term trades should be approached with caution because of the increased volatility and uncertainty. And also, we should be careful when assessing individual companies, sectors, or regions. Having said all this, my recommendation for Palantir remains consistent with what I've said before, with one little nuance. I would say that given that we are mostly in the price discovery phase right now, it wouldn't be surprising if we're not going to pull back anytime soon. So while it is very important to keep your pace for purchase at a consistent and relatively low debit kind of rate, it's also very important to keep some sort of footprint in Palantir, meaning you must have a certain position to have like skin in the game. Now, the share price does look a bit steep, so even if there are pullbacks, we shouldn't be surprised. But we should have like one of the scenarios in which at least Palantir will not be pulling back anytime soon, and we should be fine with this as well. I would recommend a maximum exposure of 8 to 10% of your portfolio in Palantir and to gradually purchase it over the next 18 months.